It's déjà vu all over again as the Fed throws the dollar under the bus. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your market update for Friday, the 14th of September. You know, the older I get, the more I realize that there are no new fiscal ideas. The Fed is basically recycling an old inflationary idea to try and get us out of the current mess that we're in. You know, they're cloaking that in this job creation. But what it tells me is that we are in the U.S. are in far more serious economic conditions than any other time in history, including the Great Depression. As we indicated early in this report, our trade triangles and the charts were telling us some time ago that the markets are headed higher and that inflation was on the way. All of our trade triangles have been signaling for some time that the equity markets and the commodity markets were headed higher. As for reducing the unemployment levels, that is going to be a much more difficult challenge as unemployment is going to remain stubbornly high. The reason for that is because we have no more manufacturing jobs in the U.S. Everything is turning or has turned to high tech and the internet. Take a company like Facebook. It runs on just 3,000 or 4,000 employees. How are the Facebooks, Amazons, and Googles of the world going to reduce unemployment? The truth is they cannot reduce the labor force. Skill sets have changed in the blink of a nanosecond. A labor force that is uneducated, not online, or too old is going to have a hard time in the new online economy. I know this sounds harsh, but that's the reality of today. Now back to the markets as we go into this weekend. It is an excellent time to look for the new 52-week highs in commodities and stocks and any other markets that are making 52-week highs. Those of you who follow this report know that what the rules are, and how to trade this phenomenon. For the next 4 days, I'll be cruising in the Gulf of Maine on a 3-masted schooner. I'm very excited about that. And I'll be pretty much out of touch with the markets. Jeremy, who works for our company, will be doing the daily update until I return. Until then, have a great weekend and every success trading these inflationary markets. Now let's go to the charts and our trade triangles and see what's happening. So let's start off with our portfolio. And the big thing here, and this is what I want to share with you right away, is this. And it's so easy to see, and that is we are pretty much from here all the way down here, we are plus 90 or plus 100. What that means is it's bull trends. And it is across the board. And you're seeing the Reuters Jeffries CRB index, boom. Silver, boom. Copper, boom. Gold. The Euro, Crude, Nasdaq, Dow, S&P, everything is in a bull market. So it tells you quite clearly that the announcement from the Fed was obviously very important, but if you remember, these markets were at plus 100 and plus 90 before the Fed even announced, and that's why the markets have a tendency to get ahead of the move and get ahead of the trend. So let's clear the screen and go to our first market, and that's going to be the S&P 500, and we are going to look at that market. It's not really, the market's up for the week and obviously for the day. We're probably going to, we're seeing a little bit of profit taking coming in because the markets have had a nice move, but you can see we're looking for this, we're forecasting this market going up to the 1550 area, which is pretty much where we were here. The high then was 1549, 1563, somewhere like that. That's the high move. So I think we're going to go back up and test that. And we measured that before, if you remember. Let's scope this in just a bit. And we measured that from taking our levels. I just draw this quickly in so for those of you who missed the move. This is a close only chart, but we measured that from going from here. There's the breakout right there. And from the low point here, this is a big energy field. We talked about that before. And measuring from this point to this point, and that takes you up to about the 1550 area. So that's our target zone. I think it's going to be met. I think the Fed is signaling it's going to keep interest rates low forever. And what else do you have to do? You have to go into stocks or you have to go into precious metals. So let's see what happens as inflation kicks in. And as I say, it's like deja vu. This is all Every credit to Yogi Berra for saying that, but pretty much what it is. I've seen this before, and we're going to get some great inflationary markets where you can make a lot of money. So you're going to need a lot of money to survive. So here it is. This is going to be the Dow, and again, you can see. Look at this classic pattern that we're looking at. Just taking a simple trend line, going right across here. You can look at those tops. Boom, market broke out, and look at where we got our signal. That was before, that was at 13,330. The market at 13,602, almost 300 points profit in there. That's before the Fed announced, and that's what I'm saying. The markets tell you what they're going to do if you just listen to them, and that's the best analyst in the world are the markets themselves. So let's go to our next market. The Nasdaq, again, the same pattern there. We've just cleared this recent high. Now with the Nasdaq, obviously we're at 5,000 back in 2000 when the tech stock, the dot-com bubble burst. But we're certainly looking very good here right now. So it looks like the trend is up. You can see we had a signal some time ago at 3,085. Market at 3,193 right now. So that's in a positive. So again, you're seeing this market make those turns. So let's go back to our next market. This is crude oil. Now, crude oil traded over $100 today, earlier. If we put this in perspective, we'll give you a line chart. And let's scope this in just for the last 3 months. You can see there it is, trading over $100. It's come back somewhat, currently trading at 98.93, but still well over this line. I still think, and remember, we had a signal yesterday in this market. And the great thing about this is if you hover over there, you can see there's the date, the 13th. And that came before Bernanke spoke. 98.29 is the point. It's 98.89, so it's a little bit higher, but we are expecting this market to go considerably higher, and this is a very big point for it to go over 98. We've talked about this area before. We closed over there last night. 98.15 was the close, and we're currently trading at 98.90, so we're going to be closing over that area. So a little bit of concern is the divergence here, but I think given the strength of this market and the general consensus in all the markets, we're going to see the markets go higher, but we may consolidate a little bit first. So let's go to the next market. This is the Eurodollar, and the Eurodollar, remember, we've been talking about the Eurodollar going higher. Look at where our signal kicked in right here on the September 7th, 127.47. I mean, these numbers, if you've been watching this report, you know what we've been saying. You know what we've been saying is right, and that our program is right. And you can see our signals came in. First signal was at 123.88. That's a weekly, and just simply put that weekly in right here. So it tells you basically if you're trading on the monthly, that was the last signal to get short. 124.06, 123.88. Not a big profit, but it's certainly a profit. And then you'll be out of the market until you had another signal. The next signal that came along, of course, was the monthly. And that kicked in and proved to be very, very successful. So let's go to our next market. We are going to be looking at some 52-week highs here later on today, so I want to share that with you. This is gold. Gold is up substantially for the week. If we just put our weeklies in there, you can see boom, 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 boom. 4 weeks in a row, we've seen this market close higher. We're currently trading at 1,772. This is and 91 cents. That's live. So we're up approximately 2.21%. for the week, and certainly it's reflective of the mood of the markets, and it looks as though we're going to see this market. Let's scope this out just a little bit more and take some of these things off here. So there you have it. This is going to be obviously the 1800 level is going to be a huge psychological level to get through, the 1800 handle. I don't think it will get there the first time, but I think we'll bop up here. I think we need to consolidate maybe a couple of for several days here, and then I think we'll take an assault on the upside. But generally speaking, if you look at this market and you just draw some trend lines in, which we talked about, in fact, we have a lesson this week on Traders Whiteboard. You may want to watch that. We're putting it up on Sunday. And we are going to see what happens. Anyway, the market looks really, really good for us, but you've broken the trend line right here. And there you have it. But just a perfect move up, and it's going to go higher. So we've obviously gone over the Fibonacci numbers, and we're going to challenge this $1,800 a level very, very soon. So let's scope this out to our next market, copper. Copper has been, I think, really a big surprise for everybody, but here's the market, up over 5% for the week. A lot of shorts got stuck in this. You can see our monthly came in last week, and that really proved to be very, very accurate. 3.56, market's currently trading at 3.83. Nice profits in there. And as we scope this out, let's just go back, in fact, to our daily. You can see this has been a really nice trade for everyone who follows this report. And here's the next level. Obviously, we're right getting close to it, and that's the 385 level. I would imagine we'll see some profit taking and some potentially backing and filling here. But generally speaking, the copper market came from what we consider to be a very large energy field right here. This is a big energy field. This is enough to propel this market higher. There's the breakout point, and that's pretty much where we got in at the 3.56 level. Nice move up. We expect to see some sort of consolidation, and then I think eventually we'll see this market continue higher as inflation continues to inflict problems on assets. I mean, really, people want to own this asset, and of course, if they're inflating, they're trying to get everything going, everything excited about the upside. So let's see how that plays out. But going to our next market. Next market is going to be one you're familiar with. That's silver. Silver's had a really big move here. And you can see again, that came from a similar pattern. Remember when, if you've been watching this report for some time, remember when we had this sort of sideways movement like this? Basically, we were probably around 50, 55, plus 50, minus 50, whatever. But the reality is this was, now we're on a plus 100, as is every other market. So that's plus 100, as is every other market. So generally speaking, we're in strong upward trends. Yesterday's move up in silver obviously was partly because of Bernanke and the Fed, but the reality is we're going to close incredibly well for the week, and that's what's important, where markets close for the week, because that means that traders are comfortable going home long the market for the weekend. That's basically, now as I said, I'm going cruising. I have positions in the market. I'm long these markets, and I'm just going to hold them with stops and not worry about it as I cruise around the Gulf of Maine. So I'm looking forward to that. So let's clear the screen and go to our next market. And the next market is the CRB index. Obviously, we are right up at 320. We talked about 320 being a very important resistance level. I think we may see some backing and filling here. I'm not sure we're going to get through it the first time, but generally speaking, this market is doing extremely well. And what it is, it's indicating that inflation is coming on strong. In fact, if you look at this market, we're up for the week almost 2.9%, which is a huge, huge move. When you consider previous weeks, we're maybe up 1%. But you can see this has been steadily moving up here. Almost every week it's been a gain for the week. So it's something to really pay attention to. And this, to me, is our best barometer for inflation, regardless. I don't care what the Fed says, because this one has crude oil in it, and that's going to be a big, big event. The one thing that concerns me, and I hate to say this, but you're seeing a lot of anti-American sentiment around the world, and that is the situation in Libya. If these oil fields are attacked, it's going to be, oil is going to go to $140 a barrel, lickety split, because it really is the Achilles heel right now in America, and that is the oil. And everyone knows it. It's no secret, so I'm saying it. I'm not going to be letting any national secrets out, but the reality is that's the key thing. In fact, if you look at this oil market, you can see it's up for the week 2.4%, pretty much in line with what the CRB index is doing. Scope this out, and you can see we've been up to 110. I think we'll get there again, and that's going to be the first thing. The key thing, what I'm looking at right now, technically, and I'm emphasizing technically, is this. I'll just draw everything in for you. So here it is. We're looking at this being what we call a twin valley. So here it is. Here's the first value right here. Here's the second value right here. And this is basically a pivot point. If we go over this level, then I think you can measure from the 80 to the 110. That's $30. So we just measure from here to here. And that's $30. Add that on to 110, it takes you up to 140. So that's potentially where I see this market going. So lots of opportunity. If it goes over this 110 level, I think it's going to be off to the races, and it's going to be some event somewhere that sparks this off. So let's clear the screen. Let's look at our next thing, and we want to really look at the 52-week highs. We are in a target-rich environment. If you look at our trade triangles, for example, let's just do our monthly trade triangles, greater volume, more than 2 million. Remember, we want very liquid markets, and we'll search since today. Boom. There you have it. So you can see a lot of market, a lot of green on the board, only one red, and that's for Southern, indicating a weekly or monthly indicator that the market's trading down. Of course, it is down for the day, and it really hasn't recovered much from the lows. So that market looks like it wants to go lower. Everything else looks like it wants to go higher. And you can simply put the highest on here. There's 93 Caterpillar, of course, big volume, Occidental Petroleum. A lot of names you would recognize here that are basically now suddenly turned this wisdom tree with their India API, ETF, so Electronic Arts and so forth. These are all companies you recognize, are all giving very strong signals. But we want to look at our 52-week high. So with that, we go to the Smart Scan. And that'll come up in just a moment. Here's Smart Scan, and we want to see there's the 52-week high right there. And let me just mark that off so everyone sees it very clearly. So here's what we're going to click on right here. And that's going to tell us markets that are making 52-week highs today. And that's important on a Friday. We want to be long these markets over the weekend. So let's just clear the screen, and we're going to put some filters on this. I don't want to just be in the last, thin market. So I want to basically view them as bar charts, and I want the last price to be less than $50. Okay, so we're not going to look at stocks $95 or $100. You can of course look at less than 50, less than 20, and so forth. But for our purposes, less than 50. We're going to look at the equity markets. We're going to adjust the volume to greater than 2 million. We want very liquid markets, remember, and we have the choice now. We can look for U.S. exchanges, Canadian exchanges, or Australian exchanges, depending where you are. Obviously, time zone in Australia is a little bit different from here, so you want to look at this on probably would be our Thursday, I guess. But Canada, you're on the same time zone, so you'd be looking at your stocks. But we'll look for our purposes. We'll look at U.S. stocks, and we'll scan. Now, remember, we have 500 here, so let's just scan and see what we come up with. It's going to be considerably less than that, I know. So here we are. Actually, it's more than I expected, 80. And what we can do there is very, very simply look at the market and say, okay, so we've got the 52. Oh, I want to do 52-week highs. I hit strong DMA. That's not what I want. My mistake. So here it is, highlighted, 52-week highs, 500, less than $50, volume, U.S. exchanges, scan. So it's just 51, so it's approximately 10%, which is great. That's more like it. And what you can do then, you can either view them as a bar chart like we're seeing here, or you can view them as a simple list, symbol list, and scan. So it gives you two options. Obviously, the list is a fast way to do it, and then you can see which markets. Obviously, some of these stocks are very low, may be interesting leverage-wise, but you can see the volume here. And if you want to see a chart, let's say Office Max, we'll just take the first one that comes here, and you'll see what the chart looks like, and you can make that trade. If it closes on the high, it's certainly going to look very good. This is not a recommendation, please understand, but that's an excellent, excellent close in this market today. So let's see what happens. We've got a very interesting week next week. I'm Adam Hewison for Market Club. I'm off cruising this weekend, very excited about that. I'll be back later in the week, but Jeremy will be taking care of you. Have a great weekend and have a great time trading these inflationary markets. Can be some great opportunities this year in these markets, so stay tuned.